Hi, I'm Vipul Mittal, and in this session, I will discuss a multiple choice question on bonds paper. On January 1, year 4, J Company issued $300,000 8% bonds at a premium of 10%. The interest on the bonds is payable annually on December 31st each year. The effective interest rate on bonds is 4%. What is the amount of premium amortized for year 4? Now, how you calculate the amount of premium amortized? It is difference between nominal interest. You also call this nominal interest coupon interest. So it is difference between nominal interest and interest cost. Or the amount of interest that you expense. And how you calculate this? Nominal interest is easy to calculate. This is the amount of interest that you pay. So stated interest rate is 8%. You multiply this with $300,000. So this is the amount of interest that you pay. This is your nominal interest. What is your interest cost for year 4? This is 4% of amount outstanding. And how you calculate this amount of bonds payable outstanding? It is face amount increased by unamortized premium. Unamortized premium is 10%. Unamortized premium is $30,000. That is 10% of $300,000. And this periodic interest cost is 13,200. And difference of these two is premium amortized. So this is premium amortized. So what is the amount of premium amortized for year 4? 10,800. This is the answer. And this is how you calculate this. All right, students, we'll connect again with another MCQ. Goodbye. Take care.